Why is the US dollar so strong right now? And is it a threat to the gold price? Let's find out. What is it about a country where the debt grows by $1 trillion every 100 days and inflation can't be tamed, and yet the currency is just so appealing? Right now, traders are so optimistic about the US dollar gaining even more strength that they're accumulating significant positions in favor of the dollar in the futures market, while taking bearish positions against other major currencies. Their collective net positions at the time of recording are at their highest level in 4 years. This is quite the about turn when compared to where things were at the start of the year. So why is this? Well, ultimately, I hate to say it, but it's just about being the best of a bad bunch. Amongst everything that is going on in the world right now, the US economy and the dollar just aren't doing things as badly as everyone else. Simply put, the US dollar's appeal comes down to 3 reasons. First up, resilience. The underlying picture of the US economy continues to be one of remarkable strength. It grew by a not to be sniffed at 2.5% last year, defying expectations for a downturn. And the International Monetary Fund forecasts that it will grow by 2.7% this year. That's more than double the rate of any other G7 country. Now, this might not last all that long, as data released at the end of April showed US economic growth slowed sharply to its weakest rate in almost 2 years. However, there are signs of resilience elsewhere. Investment in the US is positive. Housing investment and even corporate capex is strong. The manufacturing sector, which no one expected to recover post-COVID, is even growing again. But do not forget that this is against a backdrop of an otherwise pretty dire set of data coming from the likes of Europe and Asia. So of course, America looks good. Now, inflation is the second one. And it's amazing to think that just a few months ago, the party line was that inflation was on its way down. The Fed will cut rates and everyone will cheer. And now we pretend that wasn't the plan. For a while there, we thought that there might be 6 rate cuts this year. Now, the market is pricing in maybe 2, but no one would be that surprised if it's even less than that. So one might think that stubborn inflation would make an economy less attractive. After all, inflation is the erosion of purchasing power and can cause a number of issues, but not so in the short term, and especially not on the international level. High interest rates put in place to combat said inflation, when kept higher for longer, only serve to increase the dollar's appeal among international savers and investors. And this is because it's offering a higher yield when compared to other currencies elsewhere. Because don't forget, there has been a clear divergence between the US and other nations when it comes to policy. And this is set to cause big problems down the line. And just take a look at Japan for one example. And finally, geopolitical tensions. And it pains me to say this, but along with gold, the US dollar is seen as a safe haven. And so when Russia invades Ukraine or Israel and Iran are going head to head, then investors flock to the US dollar. And what is a safe haven? Well, a safe haven is an asset that you would expect to retain or even increase in value during market instability. And as we said at the beginning, the dollar remains best of a bad bunch when considered against the backdrop of economic performance and monetary policies elsewhere. For now, the US dollar will do well, largely thanks to inertia. The greenback is so intrinsic to the global financial system that the difficulty markets would go through in order to change the way we revolve around the dollar and US markets is almost enough to put anyone off trying to use anything else, almost. So no matter how bad things look right now for the US, markets still support it because the system is built around it, and it's especially effective during times of geopolitical strife. However, things are slowly changing. After all, the central banks of China, Russia, Turkey, and many others east of Germany have recently driven gold prices to new all-time highs, all thanks to their efforts to reduce their dependence on the US dollar and buy gold. So how long will the US dollar stay strong for? Well, we might as well ask, how long is a piece of string? Because quite frankly, what central bankers and governments will do in order to keep this whole jig going has already gone so far past what anyone could have foreseen back in the 1970s when the US left the gold standard. The strength of the US dollar is not always ideal for either the US or the world, and there will soon be chatter about what can be done. At home, both Janet Yellen and former or possibly soon to be President Trump have expressed concerns about the strength of the US dollar. Trump has called it a disaster. And should he win the election, then he may well fill economic posts with individuals who have suggested some pretty drastic measures to deal with the currency's strength and the country's debt, including devaluation. And abroad, there are already theories that the Japanese central bank is already intervening with its own currency in order to reduce the impact of the strong greenback. And this is likely not to be in isolation and not something that's just a one-off. So overall, for the United States, the benefits of having the US dollar as the global reserve currency outweigh the drawbacks, but that's not the case for the rest of the world. And it is essential to recognize that dollar dominance isn't an end goal for the US. Instead, it's the stability and strength of the US economy, coupled with the independence and credibility of the Fed, that attract the world to adopt the US dollar as its preferred international currency voluntarily. How long this continues for, who can tell? So, what does all of this mean for gold? The easiest way to answer this is to remind everyone that the US does not exist in a vacuum. As I've said multiple times, the US dollar looks especially good right now because of its role as both the global reserve currency and because things just aren't looking as good elsewhere. Now, gold is the same. It doesn't exist in a bilateral world where only it and the greenback exist. No, gold has reached all-time highs despite US dollar strength. The factors supporting it are actually very similar to those that are supporting the US dollar. However, unlike the US dollar, gold is not teetering on the brink of a huge pile of debt and then some. It is exposed to many of the same issues as the weaker currencies. The difference is we need to use the US dollar, but this is changing, albeit slowly. Bear in mind that gold's rise alongside a robust dollar and elevated interest rates signals a transformation in global trade leadership. And additionally, the surge in gold prices is a perfect indication that inflation is corroding fiat currencies universally, including the US dollar. Many will cite the strengthening US dollar index as a sign of the greenback superpowers when compared to the other currencies. But the dollar index offers a very limited perspective. It merely compares the US currency against a select basket of others. However, gold reveals a broader truth. All major currencies are depreciating in the face of inflation and substantial shifts in the global financial system. And this is reshaping the international economic terrain. So gold might be doing well now, but it will be doing even better as central banks get more and more frustrated with the strong US dollar, and all of the factors that got the gold price here in the first place continue to snowball. None of them are going away. And this sounds like a good time to learn even more about gold, which you can do right here or head to goldcore.com.